Follow the money. It is my favorite phrase in personal finance, and it is the one that can make us the most money, especially in a time like this. For example, the new administration has already taken over, and just like every presidency, they sit down and sign a bunch of executive orders. This is normal, but is it? Like, is this normal, or is there a blueprint that is being played right in front of our faces, and can we profit from it? My answer is yes. Let's go ahead and break it down. So, there's a lot of news coming out right now, some good, some bad. You feel how you want to feel about that, okay? But here's the thing. It is our job to make money, okay? It is our job to build wealth. Why is that the case? Because wealth buys us choices and options. There are people who want to argue whether wealth buys you happiness or not. Whatever. What I'm here to tell you is, at the end of the day, wealth and money buys you choices. Do you want to be here, or do you want to move somewhere else? Do you want a small house or a big house? When you have no money, you have no choices. That is what we are here to do. So, as we have seen in the last few days, we've seen a lot of executive orders. We're going to see some tax laws change and a bunch of other stuff. But if you paid attention to the inauguration, what did you see? Whole bunch of stuff. But there were 3 people on stage in the background, really 4, but 3 people. Those were the 3 richest people in the United States, and there is a blueprint right there of what to invest in. Why is that the case? Follow the money. What does that mean? Wealth in America is built first. Let me lay out the case here. Wealth in America is built first through government spending. What does that mean? The government passes a bill that pushes incentives. Example, the infrastructure bill. We spend, for example, $1 trillion on building roads and bridges and all that stuff. That money goes out to states. Those states spend money, and we buy equipment to build stuff. That equipment is sold by, example, John Deere. That revenue goes up. That stock goes up. Those CEOs get paid. Those investors, like me and you, can get paid. The CHIPS Act. It's not a coincidence that almost every AI and chip stock, other than Intel, did well because of the CHIPS Act. That's one of the reasons, not the only reason. All of this stuff usually starts via the government first. Go all the way back to the pandemic. It wasn't just the fact that we were in a pandemic. The government also spent a whole bunch of money during that time to help to spend money on research and vaccines. That is a part of it. And if you were investing in some of those companies like Moderna at that time, what do you think happened? So you have to follow the money. Now, those very rich people, who are they? What stocks can you buy that, help them to help you? That is what we are going to cover. But here's the thing. I'm just telling you right now, you might be uncomfortable because I am uncomfortable. You don't have to like it. I do not like it. You don't have to agree. I do not agree, okay? Just like I said during the congressional video and what they are investing in, and whether or not they can and should be able to invest in stocks while being in office, my answer was no. They should not, because they get information that me and you do not get. And we, the taxpayer, are paying them. So no, they shouldn't be able to do that. Flat out. It should be illegal. You should go to jail if you are trading on that information. No, we shouldn't have very rich people be able to buy their way and sit in the middle of, the inauguration. They should be either, judges and stuff who work for the government, or coal miners and stuff. It shouldn't be that way. However, it's my job to help us all, right, have our own options. That's the thing, all right? So there are 13 billionaires that are currently associated with the administration, but only a few of them and a few people that we have seen so far that have companies that we can actually invest in. The first one, and the most obvious, is Elon Musk. Ooh, he's been in the news for a whole bunch of stuff, so I ain't gonna spend a whole bunch of time. He's behind Tesla. Tesla, the stock, is up 65% in the last 6 months, up 99% over last year. That's all I'm going to say about it. I ain't going to go into what he did. Next, like I said, not comfortable about him. Next is Frank Bisangario. I'll put his name here because in case I'm likely misspelling it. This is a more comfortable thing to talk about, I guess. He is tapped currently to run the Social Security Administration. I'm not here to really say whether or not he's qualified, but he was at one point helping to run JP Morgan and then helping to run Fiserv. JP Morgan was up 25% in the last 6 months, up 55% over last year. I told y'all about finance stocks. We talked about finance ETFs. Check that video out here. And then I talked about regional banks. Follow the money, y'all. I be telling y'all about where things are going. I ain't perfect, but I ain't wrong that many times. Okay, so we might be onto something on the finance tip, at least right now. Fiserv, more in the fintech space, if I'm not mistaken, but double check me there. Up 30% in the last 6 months, up 47% over the last year. And that's not to say that go invest in these companies exactly, but I'm just giving you some background on where money may be flowing. Okay, we are definitely starting to see some things in banking. We're definitely may start to see some things in tech, which I don't think is news there. But next here, we have Mark Zuckerberg, who has been front and center and may continue to be so, may continue to do so. And I think I've started to figure out why, because I was questioning this the first time I recorded this, and then I come back and get some more research. So up 28% in the last 6 months. Meta is the primary source of his wealth, and then up 64% over last year. Now, obviously, this plus other stocks were good before we got here. But why? Why would Mark Zuckerberg, wouldn't he be fine even without this? That's what I thought until I started to realize, like, wait a minute, we did have that TikTok ban, and that ban was just postponed really for just a few more days. I forget if it was 75 days or 90 days, whatever the case may be. There is an option, right? It is possible, rather, that TikTok could be bought by Mark Zuckerberg. It is possible. Now, you might be saying, well, wait a minute, wouldn't that cause a trigger for a monopoly lawsuit? Because then you would own Facebook. Well, you have Meta, which owns Facebook and WhatsApp and Instagram, and then you also have TikTok. Wouldn't that be a monopoly? Some could argue that, but then again, who is going to stop you if you are best friends with the president who has the Justice Department to either stop you or rule what is and is not a monopoly? It would help, right? Because that's going to be the person at the end of the day that's going to help make or break that case. So that could be a reason as to why you would, kind of be buddy-buddy in that particular instance. Question mark. We don't know. That is my thought pattern and speculation there. That's the only way, because otherwise you would have made money without doing all this. Next here, Jeff Bezos, up 28% in the last, or Amazon is up 28% in the last 6 months, up 51% in the last year. He also owns the Washington Post, which is not something that we can invest in. We know what Amazon is. We know what Amazon can do. I don't think we need to go very deep in detail there. Next one is the person I don't think enough people know. Now, that is Sundar Pichai. Now, off the top of my head, I'm not sure if he is a billionaire. If he's not, I'm pretty sure he's got to wait another 10 or 15 minutes, because getting paid by Google will get you there, okay? He makes a lot of money from Google. Again, GOOG is one of the stock symbols for that one. I think most of us do know the stock symbols for most of these stocks. If you don't know already, you should know. If not, they should be on the screen as well. But I think the reason why he doesn't get as much flack, or at least face time, is because he didn't found Google. He was not the face of Google, though he does run Google as a current CEO. But he was also there, tucked off into the side in the exact same row as everyone else. Now, the benefit of Google being there is, one, they are currently in a lawsuit due to a monopoly claim. We actually covered that in that Microsoft was in a monopoly claim, and then that one kind of vanished as the administration changed over. This could be one of those instances where it's like, hey, remember that monopoly suit we were in the last administration? Can that just, kind of go away? Perhaps that is a reason as to why. Also, there was a major investment in AI that may help Google as well. There may be a reason as to why you're in the room. Now, Sam Altman, the founder of ChatGPT/OpenAI, he was also there. But again, we cannot directly invest in OpenAI, though Microsoft does own a bit of them and kind of help them, exist as well. But that's there, right? So for us, the investor, we have a blueprint on where to kind of place our money and where the money could be going. The importance of doing so is, again, I don't necessarily like what I see, right? It doesn't make me comfortable. The exact same thing I didn't like a year ago and 6 months ago when we covered what politicians on both sides of the aisle were doing in investing in certain things. However, we can look at it, we can analyze it, you can make your own decisions. But I ain't blind. Okay, that's the main thing. I ain't blind. And we can say, I see what y'all are doing, and what I'm not going to do is, I'm not blind, I'm not going to be left behind either in terms of staying broke, right? And if I don't want to invest in those directly, I don't have to. And I think that's the important thing too. If there are investments going to be made in artificial technology, it's not just going to all go to Google and nobody else. I can invest in a competitor, and that competitor may also do well. Going back to NVIDIA and the CHIPS Act, NVIDIA wasn't the only chip maker that did well. Broadcom did incredibly well. You can do that, right? So it doesn't always have to be, you got to invest in everybody else on stage and feel bad about it. You can say, all right, I know the money is going in this area. I don't want to do that thing. Let me do something that's adjacent to it so you can still benefit that way. But at the end of the day, based on what we see from the economy, things are getting more expensive. Wealth is becoming a lot more concentrated. What are you going to do about it? Investing is going to be the way. You just got to find out where the money is going and get there. We don't really have a choice right now. And it's been that way for a while. That is not, a political hot take or anything like that. Again, we've seen this. Right? When's the last time you seen a dollar menu? Okay, so it's not necessarily a hot take or anything that's trying to force you to do anything. It's why I've been doing this for 15 years, right? But we're starting to see it accelerate a lot more, and we're starting to see, instead of yellow flags, let's say deep yellow. I'm not going to call it a red flag. Let's call it deep yellow, where it's like, okay, it's like that now. So we have the apps, we have, a playbook, we saw who was there, and we're starting to see what's moving. So now, starting to see what are going to be the tax laws coming out, and what bills are passed, and where is that money going so that we can get there and put our money in those particular stocks. The good thing is, I think we're early. We already talked about finance stocks. We already talked about some of those tech stocks. If you want to know what some of those other stocks were and perhaps some other areas you want to invest, you want to check out this video right here.